It's like week after week, all we've been doing is getting all-time high after all-time high after all-time high. And yes, I know we're told not to trade all-time highs. However, I'm going to break down a method that you can use to help you trade all-time highs. And the reason why is because, especially with everything going on, a lot of traders feel like I keep missing price because we're near all-time high territory and I shouldn't trade all-time highs. There is some truth to that. Again, as I said, I'm going to break it down to make it simple for you. So the next time we get close to all-time high territory, you have an idea of what to look for. What's up, guys? Welcome back to my channel. My name is Handsome Kelly. I've been a full-time day trader for a little over 5 years now, which is really hard to believe the fact that XBiz went by like so quickly. I actually remember the day I told my wife, like, you know what, just quit your job, we're going to be good. But anywho, yeah, so during these 5 years, we've seen a lot of movements in the markets. We've seen COVID, we've seen bank failures, interest rates, we've seen so much. We've seen tariffs. Now, with all these different things, we've also saw the markets make all-time high after all-time high. And I know, especially if you're on social media, you see a lot of traders make a lot of money. However, if you're someone who's following your trading plan, and let's say your trading plan says don't trade all-time highs, you're probably missing out on price until we have that retracement. So I'm going to break down again, as I said, what you can look forward to so that doesn't happen to you. Overall, though, after watching this video, make sure that you are still following your trading plan. At the end of the day, your trading plan is vital to your success. So just because you're watching this video or any other video, don't just implement it right away. Like, backtest the strategy, backtest whatever you want to go about choosing. But at the end of the day, again, make sure you're following your trading plan because that's going to help you get to the next level, not a different strategy. All right, so I want to break down US30, which is a Dow Jones. I want to break that down from this past Friday. That was October 3rd. Yes, it was October 3rd. So we actually killed it in my Discord. Again, I'm going to break down exactly what we saw and how we were able to catch that move. Now, if we actually, let me move this to the side. If we actually go towards, let's start another one. This one. All right, so as we can see, this is what I have based off of Friday. Now, the line that I have right here, which just says my 4 hour, it says 46,726. That was the original all-time high that we have. Now, when we're coming close to all-time high territory, I like to use fibs, but again, I'm going to break down why I like that in a second. So this morning, well, not this morning, but Friday morning, I actually missed the move. I missed that market opening move, which is this whole thing over here. And then after that, I didn't really get into the office and settled. I was in the office, but I didn't get settled until like price was about like over around this area. And once we hit that all-time high territory, which was right there. All right, once we hit that, that's when I actually got into the office. So looking at this right here. Now, when you're dealing with all-time highs, I like to utilize Fibonacci retracement tool. Why? Because again, like at the end of the day, Fibonacci retracement tool or Fibonacci in general, those are institutional levels of support resistance. So once we have a clear understanding of that, and the reason why, because institutions they utilize that heavy, and at the end of the day, especially when dealing with indices, that's based off of an institution. So like that's really why it's best to utilize those things when you're trading those type of assets or instruments. But anywho, so like as I said, like this move right here, I missed out on a move. However, when price came to this high, mid-new all-time high, we have to have retracement. The reason why we do is because you guys already know, especially when dealing with market structure, price is not going to do this or is going to do this. Right? What price is going to do is going to come up, down, and so forth. Or it's going to come down, up, and so forth. Right? That is where we get the term buy low and sell high. Because if you buy low, it's either something that price is going to go up. If you sell high, it's something that price is going to come down. So that's just simple market structure, whether it's an uptrend or a downtrend. But going back into this right here, so a new high was created. When that happens, I'm not just going to click buy, right? It just doesn't make any sense. So what I'm focusing on is what is price showing me that's going to retest or come back down and pull back to. So when that happens, I'm on a minute time frame. Now when that happens, I utilize Fibonacci retracement tool. Now the reason why I utilize on the minute time frame is because I'm focusing on this for actual executing my position rather than going to the higher time frame. Now, you have to remind yourself that regardless of what tool you use, you want to use that for that time frame and things and time frames below that. So an example is this. I'm on a minute time frame. So my minute time frame fib was only going to be vital on my minute time frame. I'm not utilizing this on my 15-minute time frame, hour time frame, and so forth. Now, on the flip side, my higher time frame movement of price, I am going to keep that up there and it's going to showcase on my lower time frame. So an example is this. As you guys can see, right? This says my 4 hour, which is 726. It's my 4 hour, and I'm on a minute time frame. So you do want to have your higher time frame movement or price, higher time frame markups posted on your lower time frame. So anywho, so yeah, as I said, so looking at this right here, we did make a new high. Now, when it comes to Fibonacci retracement tool, it's not accurate until we get a break of 23.6. So what I was focused on was waiting to see where's price going to pull back down to. Now, a few members in my Discord, they caught some of this move. Again, as I said, I didn't catch that. I was busy. I will keep it at that. So, but yeah, as I said, like I was looking for a retracement where price is going to pull back down to. So as of this, right, I'm just speeding this up real quick. I got it at 10:06, which is right there. All right, right here. Yeah. So I got it at 10:06. So looking at this, I'm going to break everything down as well. So we know all-time high was created. So with that has to happen a pullback, right? So we have at this point we have a high. Now price came down and gave us a high or low, and either two things will happen. We either come and retest this to give us a double top and drop, or we're going to make a new all-time high and give us again a high. So looking at this, the first reason why I actually decided to go for this entry is the fact that we did have retracement and we are holding, well, we have retracement and at this point it's a high or low. That's the first reason. Second reason is that the Fibonacci retracement tool after all-time high was created, price pulled back and we are sitting on 38.2. Added to that 38.2, it is also my high time frame support. So remember, my 726 was a resistance. And then price broke that, and it's a break and retest, and that became a support. So that was my second reason. And then thirdly, we have an engulfing candle on a high time frame support, which is also a high low, showing that price was to go up, and that was my reason for taking that entry. Now, this was an aggressive entry. The best, truthfully, the best opportunity would have been this right here. Oops. Yeah, this controlling candle, because we kind of pretty much cleared this area. But overall, though, like looking at this right here, I'm going to have this play out. All right, so we see the 0% was broken, and after that, it went to negative 27%. And then once that's broken, price went to negative 61.8. And then after that, we had a nice retracement. Price started pulling back down. But anywho, so looking at this aspect of things, again, when you are trading all-time high territory, you want to utilize Fibonacci. It makes it so much simple for you to catch that position. I'm going to show you another one on a higher time frame, so you can help with that as well, right? So like another example we had, we could really do either one you want to go about doing, but same thing with this one, right? So at this point right here, I'm going to utilize Wednesday, September 10th. We're going to take that low, right? We're going to bring it up to this high right here, which is based off of September 11th. So you have this low on September 10th on a higher time frame, that high, right? So all we're doing is measuring how far price is going to pull back to before we continue going up. So in the example right here, right, we can see price pull back to about 61.8. You can see it right there, right? A nice rejection from that one. And after that, 10% was broken. Price literally went to negative 27. That broke. Price went to negative 61.8. And after that, we started to pull back some more. So again, guys, as I said, like, and again, if you want to pause the video anytime and look at my actual fib levels, these are them right here. All right, but yeah, so again, like just to make this video in full, I don't want to make it too long. Yeah, whenever you're utilizing higher time frame, whenever you're utilizing trading on an all-time high, you want to focus on using Fibonacci retracement tool because it gives you a better idea of where price is going to pull back to, as well as where it's going to expand to go towards your overall take profit. And then lastly, you just want to keep it simple, guys. Like when it comes to trading, a lot of times we can let FOMO get to us, but our discipline as well as following our trading plan, it helps us to really tame that beast in us that we have, is like doing things out of impulse. Because you don't want to do things out of impulse. You want to do things that's more structured and based off your trading plan. I hope this video is beneficial for you. If you like this, share it, leave a comment below. Yeah, I don't really know what else I could say on that aspect of things. But yeah, guys, hope this is beneficial. And I'll see you guys in the next episode. Peace out.